And I haven't even turned on my mic. There we go. So, yeah, good morning, everybody. Happy Thursday. Good to see you all. I keep thinking it's Monday with the day off, and it is Thursday, and it is the day before OpX. Look at that. We're continuing to climb on the ES. Look, gang, I'm gonna sound like a skipping record, and that is by design, and I hope that is what's coming across. We are in uptrends in the ES and the NQ. So while there continues to be a lot of folks saying, well, we're going to go down to this level or down to that level, that may be, but that kind of analysis just simply ain't trading. So we're going to go ahead and trade what we see, not what we think. And that is this morning, we are trading above the previous session close. Remember that we are seeing a little bit of the action following the bank holiday. Obviously, very illiquid action in futures, but nonetheless, you can see that the overall strength is there. Now, we still have some events to come that could add some volatility. So volatility in and of itself doesn't immediately break a trend. Volatility can certainly shake a trend up, but it usually doesn't break a trend, not with one or two candles, unless those are pretty dramatic candles. So for now, I'm going to persist with the notion that the ES and the NQ are continuing higher. The Dow is not benefiting in quite the same way, as we can see when we take a look at the daily chart of YM. And really, the ES looks stronger than it probably really is. Not that I'm in any way bearish, but the ES probably looks stronger than it really is, because ultimately what we do have here is a lot of tech. Let's see. Oh, today's Thursday. I need to be in the essentials room. That's right. Told y'all I don't even know what day it is today. All right, let me jump on over there. Hang on one sec. All right, essentials room. Good morning. Good morning. I keep forgetting it's Thursday and not Monday or whatever day it is. Sorry about that. Okay, so what we were saying is we're going to continue to focus on the uptrend in the NASDAQ and the S&P, but remembering that the S&P is probably not as strong as it may look by looking at the index. The reason being is S&P is weighted a lot like the NASDAQ and the heaviest weighted part of those 500 stocks. It's really XLK, it's really SMH that are carrying most of the weight. XLC is hanging in there. You've got some strength in communication. We've talked about that, where Meta is in an uptrend, but not quite. Now, look, there's two kinds of uptrends out there. There's the kind that is arguably going a bit further with the higher highs and getting a lot more attention. And there's the kind that's in an uptrend, but not getting as much attention because it's really just sort of moving sideways within an overall uptrend. So ultimately, what we want to remember is when we look at something like Netflix versus Meta, the strategy is the same. They're in the same structure. They're in uptrends. And these are two very strong stocks within the XLC. Now, what about cracking open something like Google? Google does not have an uptrend, but you can see here we're dominated by the green candles, which means I'm only going to be buying. So if Google heads down to the daily price movement range, the main difference between trading something like Meta and Google, and remember, Meta, Google, Netflix are all in that same group called XLC. The main difference between buying something like Meta versus Google is my expectation for higher highs is higher in Meta. It's higher in Netflix. It's going to be a little bit more limited in Google. Let's say I compare TMUS, which is also in that XLC, versus T. Right? These are more the telecommunications weighting within that overall communication sector. I'm going to, even though T is launching off and we took some optional profits on this last trading session, TMUS, when it pulls back, my expectation for follow through in the trend is going to be a little bit greater than T, right? So we can be bullish with an expectation of higher highs because of the trend. And we can also be bullish with a less limited expectation for follow through because it's bullish chop. And that nuance is really important because we pay ourselves on follow through. And more specifically, we pay ourselves when our targets reflect where the ultimate, well, think of it this way. What is the obstacle on the way to higher highs? There are fewer obstacles that are difficult to overcome in a trend. There are more obstacles and they're harder to overcome in chop. So we'll keep that in mind as we go forward, right? Differentiating between bullish chop and an uptrend. All right, that being said, let's get to it. Questions. Good morning. Good morning. Great to see everyone. If you have any questions, feel free to type in the symbol you're looking at. Let me know if you're in it already. Let me know what time frame you're looking at. Let's jump on over to crude oil. Crude oil was one of the more interesting moves on Tuesday. And a lot of crude oil right now is that commodity having shaken off its downtrend that we've seen since, end of May into here about mid-June. So it's shaken off that downtrend. It's not an uptrend yet, but it's more bullish than it has been in some time. And the thing that I want to remember is even though crude's sitting above $80 a barrel, and even though it's starting to print a little bit more bullishness by way of the green candles, this is bullishness within chop. All right. That being said, it's going to take a little bit more to convince energy stocks that crude oil isn't just chopping around. So I'm still bearish energy stocks. I'm more neutral to bullish crude oil. So this is an odd little place of transition where the downtrends are still very much in place in the oil stocks because they're not really convinced that crude oil's move is a precursor to, if you can see here, it's not really a precursor to necessarily an uptrend yet. It's got a ways to go to prove that, but it's trying. So we want to be maybe a little bit more hesitant, maybe a little bit more moderate to conservative on our zones from which we might want to get long puts in XOM or even Schlumberger, both of which are on my radar. All right, so let's go ahead and take a peek at some of the questions. And the first one that's come in, hey there, Adam. All right, Adam's asking about, there we go, SMCI. All right, so SMCI and Dell have been getting a boost from X, Twitter, whatever that thing's called, Twitter X, since it does seem that Twitter is going to be buying half of their whatever from SMCI and the other half from Dell in terms of servers. I don't know to what application or to what dollar amount, but clearly both are benefiting from that news. Now, SMCI had its heyday. Don't get me wrong. You go back to Q1 and SMCI was all anybody could talk about. But that was then, this is now. SMCI has lost its trend, and it did so specifically on March 21. So what was a really great looking SMCI has now just gone into distribution. For a brief period of time, it was in a downtrend, right? But it's been hovering above the 200, the white dots, the 200 propulsion, which puts it in the bullish hemisphere. So you might say, okay, Rog, so what do I do with it? We're going to go through the same system, the same process we would use for any setup, right? So this is what I would do, Adam. It's a neutral environment. I can't say it's dominated by red or green or yellow candles. So it's choppy. When I see a rapid mix of all those colors, I'm going to presume it's still pretty choppy. The Darvis reminds me that it's an A, choppy, and B, those are the limits of the range for now. And that's automatically drawn, so there's no bias from me. Look, when we rely on looking at subjective things, what's subjective? Trend lines are extremely subjective, right? Manually drawing horizontal support and resistance, again, extremely subjective. Looking at chart patterns, extremely subjective. Yes, we can get very good at identifying them, but here's the problem. If we're looking for a buy, we're going to somehow magically find the things that support it. If we're looking for a short, the same things apply. I kind of look at subjective patterns like the way I would look at the clouds. We have great puffy clouds in Florida, and say, okay, I want to find a bunny rabbit. And my brain will just find it for me. It will be there because that's what I'm asking it to find. So be careful with the subjective levels, automate as much as you can. But that being said, support off, say 736 and a quarter to resistance about 970. And that's the range we remain. So there's two ways to look at it. Either buy off support or buy through the momentum of resistance. I would not do the latter. The latter works best in a trend. So if you like momentum breakouts, whatever fashion of momentum breakout you like, if you like momentum breakouts, there's two ways they work best. Narrow ranges, so more narrow than, say, accumulation versus distribution. So a narrow channel versus a wide rectangle kind of thing. And the context of a trend. So because I don't have those, I won't have a high expectation of follow through. However, if price can break above 1,000, there's likely some buy stops waiting above that major psychological level. So treat it like a range bound market, which it is until it's not. But I would also favor the long side. Yeah, I would absolutely favor the long side. All right. Next up is Apple. All right. So thoughts on Apple for a swing trade. Yeah, I love the idea of a swing trade here. In fact, we've been setting that up, and that's something that we really like in the Sector Secrets Mastery. So let's go back to structure. Trend, right? We've got the trend in place. We're in it. So let me just put all my cards on the table. So the trend is in place. One thing I was mentioning, I can't remember if it was the free video, the premium video, that the day before we got in, the session before we got in on, by the way, on the 18th, the session, the 17th, pushed the standard deviations of the typical price movement range. And I really should have been a little bit more moderate to conservative on our entry. But nonetheless, we are long calls in Apple, and we'll just manage that from there. It's been a little bit more choppy. You can see we're stuck in a range. However, it's still within the context of an uptrend. So as long as I can manage that volatility, I'll be looking for it. We're going to open around 213.38. So, nothing major in terms of where we sit. But I'll look at the fresh daily price movement ranges and we'll go from there. But I do like the long side. I do like being long calls on the pullbacks. But I will say this, if I were to do Tuesday all over again, I'd be far more edging towards conservative for where my trigger is rather than being aggressive. And that'd be the biggest difference there. Yeah. And I'm in Apple as well. All right. XSP. All right. Big chip. So if I'm looking at XSP or SPX or SPY, it's all the same conversation. Thank you for asking about XSP. A lot of folks don't look at that. And I think it's a great alternative to the SPX. But all of it is this. All of it is the ES futures. The ES futures are trading 23 hours a day. The ES futures give us a running start into the morning rather than waiting for the bell and then letting all our calculations from our indicators start at that point. We're already seeing a lot of calculations in terms of volatility, volume, trend, price before the bell. And I like that edge because it is. And then one of the other things that you'll find, whether that be SPX or XSP, is that, so all of it follows ES, right? So I'm going to look at ES futures if I'm going to trade SPX, XSP, or SPY for that matter. One of the things that I've found, and probably a lot of you have found it as well, is getting the trade, especially if you're playing 0 days to expiration. One of the things that works really well is getting that trade in usually before about 11:30. And then seeing if the latter half of the day does what you're looking at in terms of follow through. Overall, if I'm looking at XSP, it's going to be because there is a short setup for long puts or a long setup for long calls on the ES, and then I can execute that idea via options on XSP, SPX, or SPY. So I'll still keep an eye on this thing. And then choose your own adventure. There's 4 ways to trade it, right? Trade the ES itself, the futures contract, the options, or the micro. Trade the SPY calls, excess or puts, XSP options, and SPX. All right. So yeah, quick reminder: summer school is in. A lot of what we've been doing the last couple of weeks is we're getting into a lot more of discussion about futures. What are the choices we have when we're looking at gold to trade miners and gold futures, options on gold futures, GLD. How is it so important right now? It always has been, though. Why is it so important to be able to understand what these futures contracts are telling us about the stocks that are weighted within the index, or the stocks that move because of that commodity, like crude oil and oil stocks? So we've been doing a lot more of that. Come check out what we're doing in that mastery room. You can check it out at sectorsecrets.com. All right, next up is FSLR. Be nice if I typed it in right. There we go. So John, for solar, mean reversion, trend, there's your mean reversion. So that's the aggressive edge of the mean reversion that we hit on the 17th and on the 18th. And if we're trading down around 253, 254 today, that would be yet another visit to that level. But unless it's down there, which it's not, you can tell that it's still trading around 260. It has to trade down to that level, the top line of my wave, which is that zone, aggressive, moderate, conservative zone of a mean reversion. It had to trade down there, but that would be a mean reversion trade, which is valid because we have an uptrend. So Chris asks, how am I describing a parabolic I don't know what that word is, but I'm guessing parabolic, Chris. How would I describe parabolic? So the way that I would look at a strong uptrend or a parabolic trend, which might be Netflix. All right, there we go. One of the things that, bear with me 1 second here. One of the things that, let's see, that I would pay attention to is for a market to be parabolic, it's what I want to see is that it has a certain amount of distance from the mean reversion. So usually if I'm about 2 times the typical price movement range, right? What is a typical number of points Netflix moves in a single session? If I'm about 2 times that from my mean reversion, that's parabolic to me. All right. Oh, I was describing. Oh, is that the word? I can't even say that, Chris. Oh, okay, I understand. I'm describing. Oh, that's what it is? All right, I did not know, Chris. That's the word? I can't even say it. Pareidolia. Oh, so when you look at something and your brain just learn something new. I appreciate that. All right, very cool. All right. Wow, I'm gonna write that down. Gotta figure out how to even say it. Okay, yes. So, and it's such a great point. If we're looking for something, thank you, Chris. If we're looking for something, think about it. If your brain wants to see something, meaning what's the justification for a long position or a short position? This is why multiple time frame confirmation can be an example of that word that Chris Pareidolia mentioned. If I use multiple time frame confirmation and I got in on a 30-minute chart, but that's not working out so well, I'll look at the 1 hour. Do I like the answer better there? And if the 1 hour doesn't agree with me, I'll look at the 4 hour. Does that look? And all of a sudden, I walk myself out to a monthly because it agrees with me. So I think that's all the same mental error, right? No, I love it. Okay, thank you. Next up is, what do I make of unemployment claims? Java. So this is what I'll do. I don't even know what the number is because I really try not to focus on the number. Try to focus on the reaction. And let's see. Well, take a look at the candle at 8:30, straight down. So what do I make of it? It's bearish. In fact, you could definitely make a good argument that because of the 8:30 Hudson, we've taken on a more bearish tone to the morning. All right. So thank you so much, gang. As always, thank you, Chris, for the vocab lesson. And Daniel's asking, I'm ready to join. I need help growing my small account. Where do I begin? Daniel, growing a small account is the same thing as growing a large account. And where we begin is with a process, a system, a formula for position sizing and risk management. And you will find that in the Sector Secrets Mastery. So come check out what we're doing, sectorsecrets.com. We have a workshop that you get as soon as you're a member that you can watch. We have a spreadsheet that helps you determine what that is for your account. And then we teach you how to be a scalable trader, because that's really the mindset. It's not about small account. It's not about a challenge. It's not about a big account. It's not about a medium-sized account. It's about how am I position sizing in accordance to understanding risk to my account. And that's a scalable mindset. All right, gang, be good to each other. I'll talk with you all soon.